Is the real estate market finally starting to cool off? Over the last 24 months, home prices have risen like crazy all throughout the United States, making it really hard for anyone who's trying to buy a home to get in. And throughout this time, a lot of economists and normal people have been saying that this is a bubble and eventually there has to be a crash coming, and people have been waiting for that. And so finally, we are starting to see some of the beginning signs of a market change, a market shift. And while for a lot of reasons, I don't think that there's going to be any sort of real estate crash, I think finally we are entering what I'm calling the Great Correction of 2022. And so today I'm going to be talking about some of the signs that we're seeing, why we're seeing them, and how you can leverage this information in order to help you buy a home this year. What's up guys, welcome back to the channel. If you're new here, my name's Keaton. I'm a loan officer from San Diego, California. And on this channel, I help people just like you learn how to buy their first home and build wealth through real estate. And my goal with this video and all my other videos is to make this entire process as simple and easy to understand as possible. And all I really ask is if you learned something new today, make sure you hit that like button because it really helps me grow this channel and reach people just like you. So a real estate market at its most basic level is pretty much the ultimate example of supply and demand. But over the last 2 years, what we saw was an extreme imbalance where there just were not enough sellers to meet the insane amount of demand from buyers that we had. You see, while the Fed kept interest rates really low over the last 2 years, this created excess demand in the market. On top of that, with the pandemic, there was a lot of movement, people moving from bigger cities going to smaller towns because they're able to work remotely. And on top of that, Wall Street started seeing real estate as a true asset class for the first time, buying up anywhere from 20 to 30% of single family homes available on the market and turning them into rentals and long-term holds. And something that most people didn't consider is the fact that as a nation, we've been incredibly underbuilt for the last 10 years. So when you have a situation like we had over the last 2 years where there was an insane amount of demand, of course that means insane amounts of appreciation. Depending on the market that you're in, like right here in California, appreciation was anywhere between 20 to 30% year over year for basically 2 consecutive years. But as we know, all good things must eventually come to an end. And of course, with inflation pretty much being a household term at this point, the Fed had to take some action in order to cut back on that demand by rising interest rates. So what we ended up seeing was a pretty big spike in interest rates, going from an average rate of about 3% to today, average rates are anywhere between 5.5%, up to 6%. And because your ability to qualify for a mortgage is tied directly to that payment, the purchasing power for most Americans shrunk pretty rapidly. As an example, for somebody who was qualified to buy a $900,000 home when rates were in the 3s, now that they're in the 5s and almost 6s, they're only qualified for about $700 to $750. So as you can imagine, this pulled a lot of home buyers out of the market who were really trying and turned them right back into renters. All right, so let's talk about some of the signs that we're starting to finally see in this market. The 2 big indicators for a shift in this market are time on the market and the number of homes that are being reduced in price. Now, the data that we see online versus what's happening in real life is a little bit conflicting, perhaps it's lagging. But one of the numbers that I'm looking at primarily is time on market, which is essentially the time from when the home is listed to when the home goes under contract. So according to Redfin.com, the time on market hasn't changed at all from this time last year till now. It's still about 8 to 9 days. In reality, what we're actually seeing is homes are actually sitting for a lot longer. While yes, reasonably priced homes that are in great condition are still selling pretty quickly, for the homes that aren't necessarily as nice, you're starting to see them sit a little bit longer on the market, especially if they're overpriced. For example, in my neighborhood alone, there's a condo that was listed for sale 4 weeks ago that still hasn't sold. And for pretty much everything other than the price of the home, there isn't much wrong with it. And that leads me into my next indicator that there's a market shift happening, which is price reductions. Once again, according to Redfin.com, a growing number of home sellers have started to reduce the prices of their listings, which they're saying is a potential signal of some easing housing demand. And that is to be expected in a market where we saw incredible amounts of growth over the last 2 years, but now we have rising interest rates, which are kind of cutting back on the amount of home buyers who are able to afford these now very expensive homes. In fact, according to a report from CoreLogic, they say that about 67% of regional markets in the United States are actually overpriced, with just about 24% of these markets being considered normal and the remaining actually being undervalued. So knowing that the average consumer considers most of these homes overvalued and interest rates are rising, sellers are kind of panicking and they don't want to be in a situation where they lose out on all this equity that they have. So now buyers are actually feeling like they want to be a little bit pickier with the homes despite the lack of inventory. Because looking at it from their perspective, these homes are already what they feel are overpriced, but now on top of that, they're having to pay a significantly higher rate. So, if I'm going to pay 6% on my mortgage to buy this overpriced home, I want to make sure that it's a home that I actually love. So what you're seeing ultimately is sellers actually bending the knee a little bit and recognizing they may have overpriced their home and kind of trying to incentivize buyers to come and put an offer in by reducing their price. So what does this mean exactly for you as a home buyer? Well, for me, anytime I see panic, I see that as a potential opportunity. You see, there's a lot of fear in the market right now, and understandably so. But the people who tend to be a little bit bold with their money, while everyone's a little bit more cautious, tend to be the winners. As interest rates continue to climb and climb and climb, what this presents as an opportunity for you as a buyer means less competition. Now, in terms of price, I think this creates a really interesting opportunity as well. Over the last 2 years, sellers weren't giving out anything. If anything, they were trying to spark as many bidding wars as possible to drive their price up. But now that there's not that much buyer demand, sellers are realizing they're gonna have to sweeten the deal for these buyers because they're already paying a high interest rate. So not only are we seeing things like price reductions kind of coming back into the fold, but we're also starting to see things like seller concessions, where sellers are willing to pay either a portion or even in some cases all of a buyer's closing costs in order to incentivize them to buy a home at that price. So there's a few strategies that you can actually use here in order to take advantage of this market as a home buyer. The first thing that I would do as a home buyer right now is look at the homes that have been sitting on the market for longer than 2 weeks. A lot of these sellers might be growing impatient, which is crazy to say after just 2 weeks, but they might be growing impatient and wanting to sell their home as fast as possible. I mean, after all, they've heard of all these stories where homes were being sold in a day way above list price and their home's still sitting on the market. And for majority of these homes, there's not really much wrong with them either. Some of them might have a few outdated features, but that's not something that you can't necessarily fix on your own. Now, another great strategy as a home buyer right now is to use a seller buy down instead of a seller concession. So sellers are able to pay a portion of your closing costs for you. And usually this is for your title, escrow fees, property taxes, things like that. But if you're wanting to get into this market and make sure that you have a low payment, what you could ask for is instead of them paying for the title and escrow fees, say you're gonna pay for those things yourself, but you want the seller to help you out with getting a lower interest rate by doing a seller buy down. Essentially, you're just buying down your interest rate, say taking it from a 5.5% to a 5%, which will probably save you a few $100s, but having the seller pay for that buy down. Another strategy that I would seriously consider, especially in this market right now, is putting as little down as possible. Now, while before most sellers probably wouldn't look at your offer if you were putting 5% down compared to a 20% down offer, because there aren't as many options on the table, you can feel a little bit safer going in as long as you're well priced on your offer with as little as 5% down. Now, I know that you're probably going to be thinking about what about the PMI? Well, here's what you're going to do. Instead of, for example, putting 10% down, you're going to put 5% down and use 2% to buy out the PMI. I've talked about this strategy in a few of my other videos, and it's a little secret that the banks don't want you to know, but you can actually pay the PMI off in full instead of paying it monthly. Now, the amount of money that this is going to take depends really largely on your credit score and how much you're borrowing, but this way it's going to save you a lot more money instead of throwing it at your down payment. Overall, I think right now there are a lot of opportunities in the market for the people who can afford it. Now, as a bonus, for people who were priced out of the market, if that's you watching this, I still think it's a great time to leverage this opportunity, but maybe you should co-sign with somebody else and go in on a property with a partner instead of buying it on your own. By combining your finances, you're going to be able to buy a much larger property, which means more appreciation for you and your real estate partner in the long run. Ultimately, right now, it's still a pretty tough real estate market. With the prices of homes and rising interest rates, I'm not going to sugarcoat it, it's pretty tough to buy a home right now. But you want to stay focused on the ultimate goal here, which is home ownership. Because in the long run, real estate is always going to pan out as a great investment for you and your family. This market is definitely difficult, and it's something that I'm going to be keeping an eye on throughout this entire time. So if you want to make sure you're staying up to date with everything that's happening on the market, make sure you check out this playlist that I left in the description below and hit that subscribe button and ring that bell so you get notified when I post a new video talking about the real estate market in 2022. Here are a few more videos that I think you're really going to enjoy and give you some more information that'll help you buy a home this year and be prepared to buy it confidently. But until next time, I'll see you later. Bye.